Hello traders, Akil Stokes here, and welcome to another episode of the Forex Market Preview video. This is your first time joining me. I am a Forex trader and trading coach over at TradingPower.com, and this is a video that I like to put out showing you a little bit of what's on my radar for the week ahead. Now, we have officially ended the first quarter of trading in 2017, and well, it hasn't been the best quarter for myself. If you guys have been following my journey, then you know that I got off to a very rocky start to start the year. I think the first 2.5 or 3 weeks of January were a complete mess, and then started to really make a comeback from that point. Now, haven't had the results that I've wanted to this year so far, and I think that's across the board. If you guys have been reading the articles that I've been sharing and just talking to a lot of other traders, it's been a very difficult year. It's certainly a different time in the market, and that means a lot of adjustments need to be made. I'm not a believer of, consistently profitable traders. I'm not a believer in them complaining and blaming the markets or blaming someone else. I'm a believer in, hey, if you want to be good in this industry, you have to be able to adjust. You never know what the market has in store for you, and the difference between those that succeed, that win in the long run, and those that maybe have a brief stint of success and then burn out are the ability to adapt and the ability to change. And with that change may come a little bit of changes to the Forex market preview as well. You guys know that I do my evaluation every quarter of my trading. I also make decisions about my business on every quarter as well. And I think one of the things that I'm going to focus on a little bit more, just because I haven't been seeing the results that I want, is really upping the focus on my personal trading and upping the focus on the transformation clients that I'm working with, since many of them are coming from a struggling position right into a very difficult market as well. So that's a long way of saying you may not be seeing as many Forex market previews. We'll see. It depends on what my time looks like. But I definitely want to put the emphasis of my time and my energy on my personal trading and the clients that I work with directly as well. But today we are here with a Forex market preview to look at an opportunity. So let's head over to the pound dollar, the cable. And we're going to start here on the daily chart. And the first thing I want to do is I want to bring in my DSR levels once again. DSR stands for dynamic support and resistance. It's an indicator that we have to really help traders' eyes get adapted to seeing important levels of structure. And I showed this in last week's video, and we got a massive response from it. We had a lot of purchases of the DSRs. We had a lot of questions about how to use them. So I want to bring them on one more time just to show you how I use them to kind of gain perspective on the market. And I'm going to set my DSR to the daily chart. I don't really venture past the daily with my analysis, so I'm not too worried about seeing weekly levels of structure. But I want to set them on a daily chart just to get a view, right, a visual representation of the previous swings in the market. And you can see our most recent swings have been this. We have a swing high to swing low right here, right? We've got an outside return to right here, really in this area as well, but we don't have enough lows to the left and to the right. So this area right here, and then we have a lower low, lower close, another swing low. Now this past week, we've made a big bullish rally here in the pound. All right, we've come up to test our previous swing, our previous DSR resistance level. And you can see we've tried to probe past and penetrate that level twice, and we have been rejected. You can see the wicks to the upside on these candles. We pushed up, we've got rejected, closed beneath. We've pushed up, got rejected, closed beneath, and even put in a nice engulfing candle. The market has then come into previous structure on the lower time frame, right in this area. Called us a little bit of a pregnant pause, where the market has put in 1, 2, 3 bullish candles in a row, right? A high momentum move to the upside. And then we get a little bit of a pause here, right? And then we get a continued move to the upside. So we've come down to that level, and now we're working our way back to retest this level of resistance. Now, do I know that this resistance level is going to hold or not? I do not. Again, I can't. I can make predictions on what the market may do, on what the market is most likely to do, but I never want to think that I'm smarter than the market. I never want to say that, well, the market is going to hold at this level. The market has to stop here. It doesn't have to, right? But what I want to do is prepare if the market is going to reverse or stop at this level. How can I be involved if the market puts in a higher high, higher close and shows a sign of continuation? Then how can I be involved? And that's how you set up your game plan as a trader. You don't try to outsmart the market. You try to create scenarios on how you can get involved if this happens or if that happens. So keeping that perspective in mind, right, looking at this DSR level, let's head down to our hourly time frame, which is going to be our lower time frame here. Just give it a second. A lot of data loaded up. So here's our hourly time frame. Here are those two structure spikes we talked about on the daily chart, right? This was the initial test. We got a little bit of a rejection. We came up to test that level again, and then we just fell off a cliff, creating new structural lows there as well. So the question is, if I'm looking for a potential reversal in this area of this big gold box, what can I look for? And what I have on the price chart in front of you is a potential advanced pattern formation. Now it's very close to a 2618 as well. We don't technically get a double top up here, but we're going to have an advanced pattern formation. This is going to be called an advanced Gartley formation and looks something like this. Right? If I go to my Constellation toolbar up here, and I draw it on manually, this starting point is going to be my high. Now, the question I get from a lot of traders is, Akil, how come you choose this as the high versus this as the high versus maybe this is the high? And it all has to do with your ability to read a price chart. I always say this, crawl, walk, run, right? Crawl, walk, run. A little kid, a baby, has to learn how to crawl before they can walk. They have to learn how to walk before they can run. It's the very same principle with trading. Unfortunately, we have a lot of traders out there that try to go straight to the advanced stuff, whether it be advanced pattern formation or maybe some type of very advanced technique in the market, before actually understanding the basics of how a market moves and how to read a price chart. So it's very, very, very important that you master reading a price chart, master identifying swing highs and swing lows. That way you're able to pick, if you're going to be a pattern trader, if you're able to pick the right starting points for your X to A leg. And if you guys haven't done that already, head over to our website, tradeempowered.com. We have some very good free training on this, right? Let's go over to tradeempowered.com. Looks like this. At the top toolbar here, you'll see something that says Learn to Trade, right? Click that button, scroll down, and this is a very good workshop. It's called Into the Gray. It's about 2.5 hours long, and again, it teaches you how to read a price chart, why markets move, how to apply OODA loop theory and IPDE, that's a identify, predict, decide, execute, how to read a price chart using new structure low and new structure high principles. This is exactly what we talked about in the previous example. And then some other stuff as well. So that may be important, right? How to develop rules-based strategy using if-then syntax, how to trade trend, counter trend, and consolidation strategies, and much, much more. But wait, there's more. So just head over to there. You can enter your email. You can watch the training. It's 100% free. Again, that's tradeempowered.com, and then click that Learn to Trade tab at the top. So if we're looking to identify our advanced pattern formation here, right? I'm going to start at my swing high right here, the start of my move, all the way up at, what is this, 126.14. And this initial move is going to be my X to A. This is going to be called my impulse move, right? It's a sore thumb move, which essentially, for you guys that aren't familiar with that term, it's a move that sticks out like a sore thumb. I know it's an American term, but imagine, you're trying to hammer something and you hit your thumb by accident, your thumb gets swollen, right? Imagine it sticking out compared to the rest of your fingers. I don't know how that got started, but that's the term we grew up on. It's a very obvious move. Let's put it that way. It's a move that stands out. That's going to be our initial X to A leg, right? Then we look for our first retracement. That's going to be right here for a B leg, right? So now we have an X to A, A to B. And at this point, you can see that the Constellation software tells me that this can either be one of two things. This can be a potential Gartley formation, right? Or a cipher formation. And if I go back real quick, you'll notice this as well. Because the B leg of this move, start over. Because the B leg of this move is so shallow, I'm breaking stuff here, clear, there we go. Because the B leg of this move is so shallow, this is also very close to another advanced pattern formation as well, which is going to be a bat formation. You can see as I draw my leg up, all right, You can see right now it can only be a cipher. If I get a little bit higher, it could be a bat or a potential cipher. But as I get to the highs of this price action, watch the top of your screen next to the letter X. Watch how it turns from potential bat or potential cipher to Gartley or potential cipher, right? So this is why you want to double check your charts. Data is often different in the Forex market. So because this B leg is so close to our Fibonacci requirement, right? You want to make sure that it either hits that 618 level or it's just below it. And that's going to make a difference between what advanced pattern formation you're looking for. That's very important because that's going to have a lot to do with entries. But anyway, we drag our move down. We find our C leg. This is going to be our second retracement. And then we're looking for a decompletion, which is going to lock in right here at 125.65 for a potential bearish Gartley completion. So right above where we're at right now. And you can see it's within that bigger kill zone that we identified as well. Now, I wanted to talk a little bit about risk. I want to show you a potential pattern formation in order to give you something of value. You guys you always want to see the charts. But I want to talk a little bit about risk involving these pattern formations. Now, the Gartley formation is one of the most popular pattern formations in the Forex market, right? It's one of the oldest ones. It's the one found on Gartley's book on page 222. It's kind of the classic pattern formation. And a lot of traders get shocked when I tell them that I'm actually not a big fan of the Gartley formation. And the question is why, Akil? Why wouldn't you be a fan of this pattern formation? It's classic. It's proven, right? Why wouldn't you like it? And for me, it's because of the risk reward. I'm a big fan of having a very good risk reward ratio. You guys know that I'm not a very high percentage trader. I'm typically about 55%. This year, I'm about 10% lower than that. I've been about 40 to 45% this year. But typically, I'm about a 55% trader, which means I win a little bit more than I lose. So the way that I exploit my edge in the market is really is obviously having a better win percentage and losing percentage, but that doesn't matter as much as my average risk reward, meaning that when I do win, my wins are larger than what I give back to the market when I lose. So think very small risk or your risk is smaller than your reward. In this particular scenario, it's going to be pretty even, and that's what you see not all the time with the Gartley formation. It really depends on how deep that B leg retraces. But in a pattern formation like this, where we have a very shallow B leg, right, you can see that we're not going to get a very good risk reward. If I have my entry right here at 125.65, let's just put front running to the side right now for you guys that are clients, right? And we're looking for a target one down at 124.92, right? You can see this is going to be my potential reward on the trade, meaning this is how much I am looking to potentially make. If my stop loss is up at 126.41, right? Right? You can see this is how much risk is on the board for this potential trade, meaning this is how much I am willing to lose. And in this case, it's either just below a 1-to-1 or it's just at about a 1-to-1. Looks to be a little bit short of a 1-to-1 risk reward ratio. However, what if you are a trader that requires more than a 1-to-1 risk reward, a 1.5 to 1 risk reward, meaning that you're saying my reward has to outweigh my risk? How do you handle this situation? And a big mistake that I see a lot of traders make is adjusting targets. Well, they're going to say, well, you know what? Because adjusting stops, right? Because I want my stop loss to be smaller, my risk to be smaller. I'm going to take my stop loss and I'm going to drag it down here, right? I'm going to make it a little bit smaller. Now that gives me a risk reward that I'm willing to work with, right? Which makes perfect sense. Now your risk is smaller, your reward is bigger, right? Everything is great, right? What do you guys think? Yay? Nay? Right? Well, there's a problem with this, right? Reducing your risk actually increases your risk. Now, how is that possible? How can reducing my risk actually increase my risk? Well, as you roll your stops down, right, you put yourself at a more vulnerable level. Your stops are here for a reason. You want to put your stop loss at a place where you have enough breathing room, right, for the market to do the silly things that markets do as they spike right above your previous structure levels, to skunk out the rookie traders, but you also want your stop loss to be close enough so that you're not wasting any money. For you guys that joined me for our strategy lab last Monday, we did a little lesson on maximum favorable excursion, maximum adverse excursion. This is exactly what we're talking about, finding that sweet spot between being safe enough but not giving away what more than necessary for a trade or for a stop loss. And when you reduce that risk, right, it looks good, it feels good, but now you actually increase your chances of being stopped out because you're going against something that you never tested. So you have no idea if having your stop loss here, right, is more or less effective than having it up here. I would assume that it is less effective because guess what? If it were more effective, you would have it right here in the first place, right? So in my opinion, you never want to adjust your risk. You want to keep your risk the same. If you're going to adjust anything, adjust your entries. I guess you could adjust your targets too. I'm not a big fan of that, but anything's better than adjusting your risk. And this is a topic that's not just trading related, but this is life related as well. I take place in a leadership group at a local university called Deliberate Success Program, where we talk to college students about how to deliberately become successful, meaning I got successful on purpose, right? Not I lucked into it. I made a conscious effort to change my mindset, change my actions so that success is the only possibility. And in a conference we had last Thursday, we talked a lot about risk and being able to take risk and not being afraid to take risk, whether it's small risk or big risk. And one of the topics that we brought up is that many people are afraid to take risk because they're afraid to fail. And what you want to do is when you take risk, right, you don't just, the whole entrepreneur thing is, hey, I'm going to just jump off this cliff, leap of faith, and I'll find out a way to succeed on the way down before I hit the bottom. Well, yeah, that sounds good, right? You'll hear us say it a lot to glorify it, but you want to measure out your risk first. You want to have a plan. You just don't want to jump off a cliff and with no plan on how to, build yourself a way to land safely, right? You want to have a plan first, a completely thought out plan, and then jump off that cliff. And, it's the same thing in trading. I did a few trading blog episodes this past week sharing my story about how I quit 3 jobs and how I just jumped into the pool of becoming a consistently profitable trader, and how that, I didn't just do that by accident. I didn't just wake up and decide one day to do that. It took a lot of work. It took a lot of planning to make that decision. And for you guys that are going to take the jump to becoming consistently profitable traders, it does require a lot of risk. It requires that you sacrifice some portion of your life to follow this dream of becoming a consistent and independent, consistently profitable trader, especially when the cards are stacked against you, right? 90% of the traders in this industry don't make it. So you have to have confidence that you're going to be one of those 10%, right? If 100 people are in the room and only 10 people get out, that you're going to be one of those 10. And you also have to prepare for if it doesn't work, right? A lot of traders will make that leap. They'll have no game plan, and then they'll fail, and then they'll be in a worse situation than they were before. The right way to do it is, yes, you want to invest in yourself. You want to, you want to invest in anything that's going to put you in the position to succeed, but plan for it first, right? Plan it out. Put some money aside. Say, hey, I'm willing to spend $5,000 learning how to trade, whether it's through an educational course or whether it's just through, going after it in the markets. I'm willing to invest this much, no more, because that way if I fail, I've already accepted that this much money was dedicated towards that. And you also need to realize that if you do fail, guess what? You're not going to be in any less position than you were beforehand. That was one of the big things with me, where I knew that if I didn't make it at trading, I planned on winning. I didn't have this thought didn't cross my mind once I got into it. But if I didn't make it at trading, what was the worst case scenario? Well, the worst case scenario was I'd go back to my old job and I'd be doing the same thing I was before. So it was a situation where the risk was minimum because I was already at my risk, right? Price action was basically already at my stop loss, but the reward was incredible. There's no ceiling on the reward. If I were to succeed, or rather when I would succeed, right? The opportunities, right, are limitless for what I can do, and that made it a no-brainer for me. And when I thought about it in that type of way, I had no problem investing in my education. I had no problem throwing $4,000, to take a trading course, because I knew that I would make much more back in the future, that this was just an investment. And if for some reason it didn't work, if some reason I bombed out, or if it was a scam and they just got my money, then guess what? That $4,000 was dedicated towards that. And personally, I was probably going to waste that in the market anyway. So risk is, I go on in that topic for forever about risk taking and whatnot, but understand that risk taking isn't just in trading, but it's in life as well. And understanding the risk reward in any situation, whether it's on a price chart or whether it's in your daily decisions, is key to just being a successful person. So I hope you guys enjoyed this video. As always, it does us a big favor if you hit that like button, if you share this on social media. Again, I may not be having as much of these videos out to you. I think I'm going to start doing something a little bit different on Sundays, maybe a full market rundown for our syndicate members, where we kind of look at a broad view of, hey, these are the levels that I'm watching for the week ahead. I haven't really made that decision yet. We'll see. But I appreciate all of your guys' support. I appreciate you guys supporting the channel, supporting us personally. And that comes from myself, Jason Stapleton, Jason Greystone, Charles Miles. And, until next time, plan your trade, trade your plan. You guys have a great second quarter, and good luck in the markets, traders. All right, traders. So I hope you enjoyed today's video. And if you did, please show us by hitting that like button and subscribing by clicking the button right below. If you're looking for more educational content, feel free to head over to our TradeEmpowered.com website, or also take a look and you'll see more videos available for you. Have a good one.